Hello, 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 everyone. Mike Arnold here, co-founder of Pat Trading Partners, along with Bob Iacchino. How is everyone doing this afternoon? Turnaround Tuesday was a flop, even in the environment where markets always go up. Good afternoon, Davey. Afternoon, George. Good evening, Anissa. Hey, Anissa, did you see I talked about the positive versus negative gamma again? Did you see that on the replay? Let me know about that. Hey, Patrick. Oh boy. Could somebody block the report that chat as spam? Hey, Chris. Let's get the show started. What? We have to start off with the spiders? Really? What are you going to leave early? We'll take a look at them. We will take a look at them. I think you're just wanting to get to that so you can leave early and abandon this wonderful live stream. By the way, no Bob today. No Bob. His AC broke and the repairman is fixing it now, and he lives in South Florida. So it's when your AC is broken, your house is very hot. All right. All right. Ugly numbers. Ugly numbers this morning on the S&P composite flash numbers, especially services. This was an abysmal number. Services falling off a cliff. Composite down from previous. We got that little pop, and then we got the rollover move again. Then we had Richmond Fed manufacturing index. Previous was 0, -8. Big contraction. Shipments index contraction. Fed services, I'll call it one tick better. One tick better than previous, but still in contraction. So all that was ugly. Ooh, pretty big draw on crude. Remember, Kashikari's speaking in about 25 minutes. What are we expecting tomorrow? We got durable goods 1 hour before the open. Do not ignore that. I'm not expecting it to be major moving, but you never know right now in these markets. I don't expect it to be major moving unless people just want to buy again. Again, I'm watching for that pop. We do have potential double bottoms. Pending home sales. The home sales are just getting shrugged up. You got the EIA numbers, so crude traders, pay attention to that. And Jackson Hole technically kicks off tomorrow. S&P, pretty mixed. Healthcare pulling back. Oil rallying. Again, we got that continued up to my key first target on that break today. Everything else was in pullback mode. Tesla, slight little rally off of there. So that's where we sit. FOMC, pretty much 50-50, 75-50 basis points, still in negative gamma territory. Where do we sit with, what are my earnings? There we go. I peeked at Advanced Auto Parts a bit ago before I was getting prepared for the live stream. Didn't see anything out just yet. That's the one I was keeping an eye on. Now remember, not much tomorrow morning. I mean, I'll have to check in at Petco with 5 doggies. But other than that, bigger after the close tomorrow. So that's going to be the bigger thing. You got NVIDIA, Salesforce, Snowflake's minor, but a lot of people still traded. Autodesk, Box. I'm interested in Williams-Sonoma, actually, from a consumer standpoint. NetApp. You got a fair amount of stuff tomorrow after the close. Thursday before the open, how long till Peloton is bankrupt, closing down more of their stores? And by the way, I'm not picking on Peloton. I'm a huge fan, but it was horribly mismanaged. So interested Thursday morning also on Dollar Tree and Dollar General. So more stuff coming with that. By the way, if you are new here, please do consider subscribing, ringing that bell, and hitting that like button. Longer term viewers, please subscribe and ringy dingy that bell. Oh, so you're never leaving, Chris. Yes, I did see positive gamma. Thank you. Also gap being filled with another gap. All right, I'm just making sure because I try to, sometimes I don't get to respond to the comments actually on the YouTube comment section, but I try to see if there's major ones I need to respond to. Bob is not here. AC broken. He might be popping on tomorrow afternoon. Again, I'm just, we're still trading moment to moment, so we'll see. Let me see here. Does negative gamma trigger only down moving up and down? Negative gamma triggers up and down. It again, think of it as negative gamma is a volatility amplifier. Why? Because the primary dealers in negative gamma mode, that's why I put this up. The primary dealers, and the deeper it is, the more this has to happen. Primary dealers are your major firms that sell and roll up tons of these major option positions. Okay, because they're doing hedges, they're selling hedges to their customers. Okay, so when you're in negative gamma territory, that means its volatility increase. And why is the volatility increase? Because when the major dealers are in negative gamma territory, they have to sell declines. They have to sell to get back to delta neutral. Why do they want to be at delta neutral? Because they don't want the added exposure most of the time. Now, sometimes they will let it slide a bit because, hey, look, we're tanking. I have possibly negative delta on markets tanking. I don't want to hedge that out right away, but I don't want to leave it exposed for hours or days at a time. So what this means is, look, market's going down. In order for me to get back to neutral gamma and neutral delta, therefore, I have to be selling into the declines. Conversely, they also are buying into the rallies. So markets going up, yeah, your negative gamma can be getting closer to zero. But if you're way down here, let's pretend we were at 3,800. That's deep in the negative gamma territory. Markets rallying, they're actually having to buy as the market's rallying to hedge the positions. So what does that do? It reinforces the rally. Now, that buying is going to get less and less as you get to neutral gamma, but it's still there until you get to neutral gamma. Now, once you get into positive gamma, the opposite is true. The primary dealers, in order to hedge back to delta neutral, have to sell rallies. So as the market's rallying, they're selling into rallies and they're buying into dips. So that's a volatility decrease because you have big players doing the opposite of what the market's doing, as opposed to negative gamma. The big players are doing what the market is doing and reinforcing it. That's the reason, especially now. Now, when we're in major bull market mode, where there's slightly less hedging going on, you don't dip into negative gamma as much. You can, but you don't dip into it as much. You're more so stuck in some positive gamma territory. But when you start getting these rollover and more hedging going on, negative gamma territory rears its head more often. Hey, Daniel. Oh, that's not surprising. Toll Brothers revenue missed. Hey, Vladimir, thanks for being here. Your commentary is great. Can you briefly give an example of rotation zone? I assume it means going to the blue 21 and BMA bounces off it. I'll talk about that. Coco, it may rally when Powell speaks, but unless Powell says he's going to pause or pivot, he's not saving the market. You're welcome, Anissa. Let me get to that. Then we'll look at the SPY. So the rotation zone, especially remember it on higher time frames, is between the two lines. The two lines that I utilize, and there's more videos up on the channel for free of how I construct, and you can even search for how I set up my charts. The orange line, yellow, orange, however it's appearing on your monitor, is the 8 EMA. Again, we don't hide stuff here, 8 EMA. The blue line is the 21 EMA. Those are the two areas that construct what I call the rotation zone. So I'm just going to give an example on the longer term levels. I watch for rotations. Bull markets, I watch for rotations somewhere between these levels. Does it have to hit? No. Can it dip a little beyond? Yes. I still want closes within it. So you see in the bull market, dip, 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 dip. Bear market. You start getting down, spike into it, roll over, pause, then we break through it. Okay? And you can use that on different time frames. Like yesterday, remember in sell mode, I love this when things are in sell mode or the European session. But yesterday, let's get to yesterday. Where are we? Let me give a good example. Here we go. I mean, you hear me talk about it here. Well, I can just use the 1 hour. Even the 1 hour in the S&P. Look, it just hugs, spike into rotation zone, rotation down, into rotation zone, rotation down, into rotation zone, rotation down. You see this, and then just hugs the 8. But between the 8 and the 21, and then once it gets above the 8, I start watching for closer to 21. All right. Why do I utilize that? Because I can then do other things with it. By the way, this is also where I'll utilize stuff, and I've made some major tweaks and testing stuff with the percent B. That's why I am working on releasing it. I wanted it to be even better and more. I shouldn't say idiot proof because nobody here is an idiot, but the more complex things are, even I can mess them up very easily. So when I say idiot proof, it's actually preventing me from making Mr. Bungle mistakes. Because I like something that I can glance at. All right? I like things I can glance at. That's why I like the rotation zone. I can glance at and say, okay, rotation back up. Or rotation back down. I can glance. I don't have to sit here and do calculations. I don't have to sit here and measure out everything like the percent B. I can see, okay, pull back rotation zone, percent B buy. Pull sideways rotation zone, percent B buy. No percent B buy yet. And then like with sells, and I'm working on stuff because people want some sell stuff, but you have like a percent B sell. So there's things I can glance at two different things and come up with, hey, that's a potential entry. Now, why do I like that? Because you're looking at, let's say I'm going through, and you can set up scans. You can program scans in TradingView or in Python for this stuff. Like, all right, the percent B rule, we get the pullback with the percent B. We're still above the 21 EMA. We reverse the move, buy signal. So yes, it can be programmed. Especially for the entries. Why I like stuff like that is because it's easy. I've seen people come out with 20 rule systems, and it's like literally, even to program it is a nightmare. And then there's so many things that can go wrong when you're trying to program 20 rules, or you mess up one thing, or you tweak one thing. You got too many parameters. Keep it simple. Again, back to my idiot proof. Keep it simple, stupid. I can be stupid if I make things too complex. So there's a little thing. That's why I utilize stuff like that, just for newer people here. Yeah, let you check your AC. Hope Bob is okay. AC. Well, when you have to replace the whole thing, I think he said it was his blower motor. Crude oil bullish pattern on daily chart. Doji candle. We'll take a look. So that's why I'm trying to make stuff. Before I like to release stuff, I try to make it as good as possible for everybody. It's, again, as you know, this channel is pretty much donation delivered. So, and if I'm going to sell something, it's got to be good. It's not just, hey, let's put something up for sale. All right. Chris learns every day. Are you program in Python? Genomic stock? So, I mean, I'm here for a bunch of the, now yesterday I sort of went on the AMC ape thing because I'm trying here to educate stuff. Even if you're never going to trade something like that. By the way, AMC was shortable today, And it was a bunch of people were taking advantage of that. Why do I go on sometimes tangents that you might go, I'm not real interested in trading AMC. It's a meme stock and this isn't a meme channel. Why are you covering it? Because I'm trying to give people knowledge that they have to understand. All right, when a company does a stock issuance, that's technically issuing more shares, but they're the preferred shares. And how does that affect stuff? And is there an arbitrage play? Because it just makes you a smarter market participant. Instead of listening to a bunch of these, I'm going to call them Nimrods that have very low information and put it out there like they're experts on the YouTube and get 100K subscribers and tell literally thousands of people incorrect information. And giving incorrect people, I think I do have somewhat of a fiduciary responsibility to people that I'm trying. I might make a mistake and I'll correct it if I do, if I'm aware of a mistake. Because I have no problem. Because, I'd rather correct something and give people correct information. And I don't want people chasing things that are going to give them wrong information or making poor decisions. All right, SPY. I know it was a request. The better patterns are in the S&P, but right now, let me get back the lines. Breakdown tomorrow, still watching this key area. We're at 411.50. You can go 411.50 to about 409.50 is a key support zone if it does break right there. This is really sloppy, but if you do, it depends where we open. We'll have to look at this tomorrow, but I'll be watching this 413.70 area if it holds even with the potential gap tomorrow. But the bigger bull plays above 415. Unless we break down, this is the daily chart. I can't get overly bearish again. See, because even if you break below this 409.50 level, you're slamming into this prior support level with the 50. And lots of people key off the 50. That's why I keep it on the chart, because you can find some good levels there. So even on a break, we're still in the stopping point. So it would just be a quick little trade to the downside. It wouldn't be, okay, I'm getting massively short. Now, you get into this area, now you got a clear path move. Which is another thing. Why do I talk about clear path moves? And people have asked me before, do I use volume profile? Yes. But you want to know something? You don't have to be an expert on volume profile if you learn to look for clear path moves. Why? Because let's say you trade one, let's say you really focus on the S&Ps. All right, I love the S&Ps. I can look for clear path moves and fine tune it with volume profile information. But let's say I'm going through 50 stocks, I'm glancing around at stuff, and I see clear path moves. I'm not going to spend the time to look at volume profile on each of those things. I'm just not. I can get 90% of the way there with clear path stuff. That's why we teach it. So yes, you can fine-tune clear path moves even more. But look, even the bigger tip is you got clear path on the daily. You even got, oh, look, I clicked down. Clear path, I guess I'm in teaching mode today. Clear path on the 4-hour breakout zone. 398, 399 roughly. And that's right by 400. So you got your 400, the 399, 400 support. I even need to trade that shorter term. Well, boom. I can go down to 1 hour and find some pivot points in there. This pivot's right near that 399 level. This pivot, however, is not. So I can use, let's say you're going short into this area on a higher time frame. I can use 403, 402.96, 403 as a stop reduction point or possibly a take profit point. So you can do this literally in 30 seconds. Whereas if I'm going through volume profile and trying to see all this other stuff, all right, where are the peaks, where are the troughs, where are my hooks, it's going to take me a little longer. Well, that's great, We'll have to talk more. Correction, I learned for watching you every day. Now I'm confused. Kiss is stupid. My buffer is full. That's why we do it. That's why, you know what? it gets easier because you can glance at stuff. If you can glance at it, you can trade it. If you have to overanalyze, I don't mind overanalyzing, like, or I wouldn't. I hate overanalyzing. Like a more, if you trade a key or a couple key markets, you can go into more in-depth analysis. But if you're also trading a bunch of other stuff, you can't spend. You're going to spend all evening analyzing stuff. Hey, Patrick. Thank you for the super chat. Everyone, give a big shout out to Patrick, supporter of this channel. Thank you, thank you, thank you. And I like other people because even if you don't donate, other people's donations keep this information coming out, so you should thank them. Hey, Amit. Well, we know Amit loves the teaching. So there's your SPY. Now, on a percent B basis, and percent Bs are for bounces that can turn into more than bounces. You get a close above today's high, you got a buy signal. I wanted to touch on one other thing with the S&P, because we talked about this little break this morning. This little thing I was watching, right, this 4153. Break above it, reversal. Remember, I talked about this last time. I'm going to go into it again real quick, guys. I think this is so key. Close above that level. I watched for the pullback and the rotation back up. Why do I watch for that? Because I'd rather, especially in these markets, especially in bull mode, I don't mind giving up a little of the price action to get more confirmation. In a raging bull market, if I'm trading from the long side, don't need as much confirmation. In a longer term bear market or a choppier market, I want more confirmation. So you see here, break above, watching for the pullback. And I'm showing it on a 5-minute. And last time I also showed it on the 1-minute. And this is where I will glance at a 1-minute. But look at this. This is actually a double. So I'm watching, okay, am I going to get the rotation? We got selling in this area. Sell. Look at all these bars of selling pressure. Above 4160. Can't hold anything above that. So I need to get now. I want to retest. All right, I got the retest. I want to see it get above 4160 to really prove this breakout. What does it do? This was technically, we saw this exact same thing last time. Double top, back at 75, stalling out. So it cannot sustain anything above there. Triggering that double top, running on down, coming back. So what was this then? This was support, broken support, coming back to that key area, becoming resistance. Boom, done. That's why I like waiting. I'll give up a little price action for confirmation in these markets. If you don't want to give up the price action, you want to try to get on a break, what I would do again with that multiple lots air trigger is if you start seeing, and you can start reading the tape too, but if you start seeing, because the tape will tell you even better than the chart will, but for just the chart readers, you start seeing, boom, can't get above, can't get above, can't get above. Take a little of that position off and raise your stop. So, yeah, you don't necessarily get your stop to break even, but you can get it so the profit you took off, if it does turn around, you stop out of the other half, and it's a scratch trade if it doesn't sustain the level. That's another way to do it. And that's true on bigger time frames too. So don't just take that as minor time frames. Now, the S&P. This is a sloppy double bottom. It might be erased. I'm going to use the aggressive targets for right now because we could trade back down to this area overnight and we will revisit it tomorrow morning. But that's the potential I'm watching for, and I need a close above that, not just a break above that. That's 41, 61, 75. Now, that could be erased. On a down move, I'm still watching this 41, 123 to about 4118, but a break below 4118 for 4100 to 4095, and then we already talked about if we start breaking below that, which would be very bare. But the next key area is right here. You have that 37.5% major harmonic, which is the red line, 37.5 minor harmonic, and rising 50, and a gap fill. So this is a support cluster. We start breaking below that, then it's getting more aggressively short into the clear path move. I hope that makes sense. That's how I look at it. You know what? We got to give Patrick, there you go. Thank you, Patrick. Patrick, look at this. Patrick, thank you, everybody, for acknowledging Patrick. Patrick's the GOAT. Thank you. John, we'll get back to Bitcoin in a second. So there's some little extra teaching. So we do have a potential buy signal now. Let's say we get, look at this. This is so fascinating. Now, this does not make it higher probabilities. You have to take two systems and keep the probabilities separate. They're not additive. Unless you've tested them together and you've come up with a new set of probabilities, they're not additive. But we do look where the double is, how it's triggered based off the daily. So that is actually the high of the day. And you have your little daily. And remember I said above today's high is a %B. So this could be triggered intraday that turns into a more aggressive daily buy. So there, you can't add two systems together though. It doesn't say, okay, I'm going to load up I'm going to back everything else. Markets always go up. I'm maxing out my leverage. I'm going for full 4-to-1 if you're trading the stocks, day trader leverage. If you're trading everything else, I'm not even trading the micros. I'm going to the minis. I'm backing up. I forget that 2% risk. I'm going all in on the risk. No, just because you have two things that could even trigger the same buy at the same point, you don't increase your risk. You can trade them as two separate signals. So you could say I'm allocating 2% per signal. So in that way but then you're managing the signals independently with the stops based off each systematic approach. Hope that makes sense. Boy, I should really charge for some of this stuff. Daily cycles are at the bottom. So we are watching for a potential bounce and RSI, the short-term RSI. And again, for anybody who wants to know, it's the 5 period. It's not your standard 14 period. Do not use that for most stuff. It does not test out well. The 14 period, the 13 period, the 15 period, whatever. And default, that's where don't rely on default indicators. They're just set up there because as a developer, you have to put something in as a default. So they go to the default back. What did Wells Wilder use? Or what did, what's his name? I just blanked out on who did the MACD. George Apple. I forget how to say his last name. But those are the stuff he tests. And by the way, the default MACD stuff, it was optimized for stuff in the 60s. It somewhat held up in the 70s. It actually has tested out horribly since. There are MACD parameters that work better. The standard ones that most people rely on do not test out very well. Have I lost everybody or is anybody still here? I should just set up a live stream and talk to myself. So that's what we have. Ahmed's still here. Let's see. I need to watch last night and this morning's class. Possible short-term rally, then bigger rollover. That's what I'm watching for. Again, could we go and break out above the 200 again? Yes, we still have that medium to long-term system flip, which is not flipped back. However, just based off market structure, we could rally up again, even form a double top here. So don't be shocked if we get a rally that has more legs than you think. You could even take out this high and still have a potential double. Remember, the 62.5 is up at this 43.68 level. Now, we're not trying to forecast stuff. We're not saying it has to do that. We're going to watch still daily price action. And that's another question I get. Well, why? You said this morning that this was what you were looking for, and then by the afternoon you say something else you're looking for. Yes, especially in these markets. Why? Because you get more information with the bars. Now, in the longer term pattern, I'm not going to switch on a moment's notice unless we break key levels from bullish to bearish. However, on the short term levels, we get more information. We get more patterns. For somebody to get stuck in a mindset I think, is silly. It's like somebody brought up that I've been waiting for this trade for 80 years. I'm not waiting for a trade for 80 years. If I'm still focused on a trade in even 5 years, I'm fixated on something. I'm not analyzing it currently. Now, that could mean something else, like I've been waiting for a key setup in something like this for a number of years, which could happen on a very long-term thing. All right, everybody is still here. Glad to see it. Still here, and actually what you're saying, what parameters are, again, MACD is much more time frame specific. And there's a reason it's not on my charts. But if you want something, use more closer to fib, some key fib ratios on a wider separation of moving averages. Is there a key level for that system to flip bearish? The longer term one? No, because it has two inputs. So I have to have, and I can't predict when the inputs. Hey, Sashi's here. And there's way better parameters for MACDs for the longer term than the standard defaults. I've looked at that in the past. It can be used for systems. I'd just rather read the price action because you can see rate of change just in pretty much on the standard bars. I would agree with that. Okay. Let's peek in at Bitcoin. We don't need to do the markets ad nauseam. Bitcoin, this is pretty much at this point just turned into a horizontal channel. If you want your aggressive targets, it's going to be roughly the same. Would not use them. I'd use the conservative channel breakout strategy at this point, which would be 21,870, 22,31, 22,020. Again, that would just be a corrective move, and I'd be watching this daily rotation zone. So anything here with cycles turning up, I'd be watching in this area also to kiss some of this key prior support becoming resistance goodbye. I am watching for a major breakdown play. Again, this was the first breakdown. Now I'm watching for the little corrective bounce. And then the major areas once we get this close below 24.35. Then we should probability-wise retest the lows. And then I'm watching for a break to new lows. Because on the bigger picture, we have a channeling flag pattern into a weekly rotation zone. Let's get to crude. Rich crude oil. Crude oil doji on what time frame? Crude was watching for the break above the 200 and then hitting this 94 level, which we hit, which could be utilized as a really nice stop reduction. Next area, very key, is the retest. So you see here, the 200, which is an area. Don't think of 200 as a ceiling or a floor because you can break above it, but watch for key closes. So Dip below, close above, close above, close above, close above, close above, close below. Close slightly below, close well below. Coming up to kiss it by, close below. Kiss it, close below. Now we're coming back up. That is a target area, not only from the highs of the 11th, but the 25% harmonic and the 200. That is the next target higher. Would not be shocked at all to see that trade overnight or tomorrow. Then, the next target, dueling highs right here, prior major harmonic level, that's why that green thing's still on there, and declining 50. So especially if you get a close above there, that's the next target. Why are the targets tighter? Because look at this. Even with that, remember that 25 harmonic that I just talked about? This level, with the 200 there, look what else is there on the weekly. The declining rotation zone. So that's going to be a major reactionary point. Above there, major next point, just based off key closes, and the top of the weekly rotation zone is 98.70 roughly. So those are the upside targets for raising a stop. And then I watch, especially in that weekly area, for the rollover play, especially with daily cycles back to the top. So I wouldn't get over greedy on this trade. And if you want to try to eke more out of it, there's some key stop areas, or take profits and raise stop conjunction. You could run a little stronger with a weekly cycle still trying to get to the top, but you might get a short-term pause reaction, then another roll play up. I use the stochastic RSI. That's what these bottom things I use for my cycle indicators are. I like the stochastic RSI way better than the pure stochastics. That should tell you something. If it's on my chart, there's a reason things are on my chart. And what people are missing also is Buffett has now in the OXY, that's a very long-term play. It's actually got decent fundamentals to it. But he can withstand massive pullbacks, and people are rushing into it like it's got to go full target, like he's going to turn it all around and everything tomorrow into what he believes it should be. It's got time. You're welcome, Daniel. Notes. Still on. Remember, this is why we watch the closes. Again, people teach so much stuff at the highs and lows. I will use it because I'll cite it for key things like triggering patterns. However, the most powerful thing is the close. You broke below this level, could not sustain it, and closing back in the support zone. Really learn, and also on a stop basis, learn to use closes over breaks of levels. I've seen so many systems that once they went to stops on a closing basis versus a broken basis, like a level broken versus a close below that level, the stats improved massively, not minorly. I'm not talking like, that's just slightly better. I'm talking significant. So learn that it's another key thing. Close is the most important thing. Not just on the daily. Especially for long term, though. Close is the most important thing. There'll be an aggressive buy above today's high in the notes. I don't need to look through all these things. We'll do that tomorrow morning. Again, this is another example. Dow dipping down below this very key support level, but closing back in it. If the Dow does break, you got your support here, right in here. That's a big if. And by the way, an aggressive buy in the Dow above today's high. Did this pull back enough? This is a sloppier pattern, but no. And why do I measure it out? Because it doesn't mean that this high, if it doesn't qualify for a double, doesn't mean that it won't be a significant break, because a lot of people will be focused on that. What does that mean is I don't use double targets. What would I use then? We have clear path targets. So it alters. It doesn't mean you can't trade a reversal off this key level. It means you don't use the double targets. You use other targets given to you by market information. Tesla again filled the gap. You still on a move again above today's high. I'll be focused on the next gap fill. No, this did not invalidate the potential double just yet. All right. I'm tired. I think we got a lot of teaching in. I'm going to give one more shout out again to Patrick. Patrick, thank you so much for the super chat. Really, really appreciate it. Again, if anybody else ever wants to support the channel, you can do a super chat. Yeah, I'm not worried about the split. We're going to split. And then, oh well, you're still going to have people try to rush back in. I'm just going to play the patterns. And that's not really up. I mean, this is weak sauce considering we got the split coming up on the 25th. This is weak sauce overall the last few days. That should tell you something. Also, you had the stuff going on. I think this was more due to the potential Twitter whistleblower, but if you look at the what the guy is saying, it actually hurts Elon's case more than helps his case. All right, let's just glance in at Netflix. Again, another shout out. Patrick, you're getting the shout outs. You are the GOAT today. Thank you. Netflix. Ugh. Don't get stuck on trading some of this, guys. Just going off this most recent swing, you had this little mini top pattern here. If you're looking for an aggressive buy, it would be on a close above today's high for at least the gap fill play. Cycles at the bottom on the daily. Cycles rolling over on the weekly, so that would be just a short-term bounce play for me. Other than that, if it starts getting below 214, you have a clear path move, and I'd be watching for the bigger pullback again. Look, here's again why we focus on the rotation zone. Remember, close above the 8. Look where we stalled out. The other end of the rotation zone. There's a method to this madness. There really is. So does that mean you got to go straight down? No. We could get a little bounce play, fill the gap, and then the more substantial rollover play. A longer term, I'm watching for a longer term bottom in Netflix fundamentally. But it's still losing some subscriber base, so I am being patient. But this was the first thing. I'd just be careful with cycles rolling over, especially if we start after a pop. If we get the next rollover move in the broad market, Netflix is going to come back in this consolidation area from my standpoint. You're welcome, George. You're welcome, John. The Noid made me do it. Well, I like that Noid. Big shout out to the Noid. Throwback to my Domino's Pizza days. The good old days, driving around, delivering pizzas. Which actually is a pretty fun job. Especially in the summertime. But I'm beyond that now. All right. I'm going to wrap it up for now. We'll take a look at anything else tomorrow. Everyone have a fantastic rest of your evening, and I will see you. Remember, durable goods, 1 hour before the open, 30 minutes before the live stream, so pay attention to that. And I'll talk to everyone later. Bye.